3 months before I figured any of this out, I had turned $10,000 into 87, not a typo, $87. I was doing everything the YouTube gurus told me to do. Big conviction, big position. This setup is perfect. Risk it all. I was treating the market like a casino, except in a casino, you lose slowly. In the markets, when you're reckless, you lose fast. I remember the exact trade that broke me. A breakout on a tech stock, clean setup, perfect volume. I risked 40% of my account on a single trade. It gapped down at open. I froze. I held. It kept going down. By the time I closed it, I had lost over $3,000 in one morning, before I'd even had coffee. That's when I found the 1% rule. The concept is brutally simple. Never risk more than 1% of your account on any single trade. On a $10,000 account, that's $100 per trade. I remember thinking, that's nothing. That's pointless. But then I started doing the math. Every morning for 6 months, I woke up before the sun came up, opened my laptop, and pulled up 300 charts. Not to trade, not to make money, just to study, just to understand. I'd pick a random chart from 2018, 2019, 2020. Find a setup. Ask, what would 1% risk look like here? What would 5% risk look like? And I tracked every single outcome for months. What I found changed everything I thought I knew about trading. Here's the thing, nobody tells beginners. When you lose 50% of your account, you need a 100% return just to break even. Think about that. You're not starting from zero, you're starting from behind. But with 1% risk, even a brutal losing streak, 10 losses in a row, you still have 90% of your account left. You're still in the game, and staying in the game is everything. Now here's where it gets interesting. I modeled a simple trader. $10,000 account, 1% risk per trade, 50% win rate. That's a coin flip. 1 to 2 risk reward. For every dollar risked, 2 gained. 20 trades a month. At the end of 12 months, that account didn't just survive, it grew. And the gains in month 12 were larger in dollar terms than month 1. Even though the percentage was the same, that's compounding. That's the slow miracle. The math that works silently, invisibly, until suddenly it isn't slow anymore. But here's the thing about those 6 months and 300 charts a day. It wasn't really about the math. When you practice on historical charts long enough, you start to see something you never saw before. Even the most beautiful setups, the ones you'd bet your life on, fail constantly. A perfect bull flag on a strong stock in a roaring market fails 30% of the time. A textbook breakout with massive volume fails. Sometimes. The market doesn't care about your conviction, it only cares about price. And once that really sank in, once I accepted that I would be wrong consistently, regularly, repeatedly, everything changed. When you risk 1%, being wrong doesn't hurt anymore. It's just $100. It's a lesson. It's data. It's not a catastrophe. And that emotional stability, that calm that comes from knowing a loss can't destroy you, that's where the real edge lives. Not in the indicators, not in the strategy, in the ability to take the next trade without fear. So what happens to your bank account in a year with 1% risk? It depends on your win rate, on your discipline, on whether you actually follow the rule when the perfect setup shows up and every cell in your body is screaming to go bigger. But here's what I can tell you from 6 months and thousands of charts. Your account will survive, your mind will survive, and survival, in this game, is the only foundation that profit can be built on. I left a simulator in the description. Put in your own numbers, your own win rate, your own risk, and see what a year looks like. Not with hope, but with math. Because hope is what I had before those 300 charts. Math is what I have now.